last trading day of 2023 opened amidst mixed global cues. Shares in the Asia-Pacific region are trading mostly in the mixed territory on Friday morning. Meanwhile, traders continue to remain positive about the US Fed starting cutting rates in 2024. The Asian markets are trading mostly higher, while the US stocks ended mixed overnight. Sensex opened 180 points lower at 72,221.85, while Nifty opened 56 points down at 21,722.6. DG India correspondent Ajay Mishra joins us with more. Ajay, December 29th marks the last working day for the markets. Let us get a sense from you as to how do we expect the day to be for the investors and the markets together.
Good morning, Preeti. I think 2023 has been terrific for Indian stock market. As far as today's trade is concerned, we expect a uptick move in the stock market. But December, the month has been very fantastic for the Nifty and Sensex because it has gained almost 7% in just 1 month. If you see the track record of calendar year 2023, the Indian stock market have gained by 18%. The Nifty 50 and Sensex has surged by over 20%. Whereas if you compare it with the emerging markets like Shanghai and Hong Kong market, they are not even at par with the other emerging markets. The Indian markets are clearly the bright spot at this point in time because there are strong fundamentals which are working at this point in time, and that's why the investors, both from the foreign portfolio as well as from the domestic investors class, everyone seems very positive and excited about the prospects about the Indian stock market, and that's why it is one of the most active market at this point, and also giving returns to the investors. So we understand that going forward, the strong fundamentals along with the strong sectoral performance of financial and banking sector, along with the infrastructure push which the government is focusing, is going to yield great results for the investors, and that's why we are seeing this great momentum where the Sensex and Nifty are creating fresh time highs each passing day, especially in the month of December.
All right, Ajay, now since it's the last day today, this prompts me to ask you about the evaluation of the year that will be gone by for the markets, because we've seen 2023 was marked by geopolitical challenges and also how that had a bearing on the markets as well. In spite of that, you are talking of India being the bright spot for the world. What has led to this resilience for the Indian economy? Let us hear more from you on these two questions.
So, Preeti, if you see that 2023 has seen the biggest financial crisis after Great Depression in the US, where most of the most powerful banks have failed in US. That is very pertaining to understand at this point in time that on one side, if you are seeing that rising inflation and rising interest rate has been the flavor of the whole calendar year 2023. There was a tremendous pressure on the US economy in the beginning of the year. Going forward, now the Federal Reserve have started showing signs of some kind of recovery in the US market, and they are indicating that there might be some pause in the year 2024 going forward, and that's why there is a positive sentiment in the US market about the prospects of US economy. But throughout the year, there was a great negative sentiment about the US economy itself. If you see the Eurozone, Germany, the largest economy in the Eurozone, have shrunk almost for the 2 quarters. You see the UK economy, they also the economy went to the negative territory, which is not a good news for the Europe per se. Emerging markets, I think Shanghai Composite have done better than these European markets and US markets, but India being the fundamentally very strong, and it was surprising for the investors and the world to see the GDP numbers 7.8 in Q1, 7.6 in Q2. It was a great surprise for the investors that the government is giving a great push for the capex, the capital expenditure, and a great investment in the infrastructure. So look at the defense stocks, look at the infrastructure stocks. They have performed very well. Whereas the US companies, US economy is pushing Indian IT stocks in a positive territory and greater heights. The government push here at the domestic level is pushing all the infrastructure and related stocks, real estate stocks are burgeoning. So, I think the most important and striking point is, Preeti, that domestic institutional investors have surpassed the investment from the foreign institutional investors since last 3 consecutive years. That's very positive that the Indian investors have now faith in Indian market. We are not dependent on the foreign FIIs and FPIs to actually hold the market. It is the domestic investors which are supporting the market, looking at the prospects going forward that India is going to be the bright spot in this time of poly crisis, as we say, and it is going to be the most promising, fastest growing large economy that gives a promise of a stable government, stable policies on the economic front, and obviously a good stable returns for the investors as well.
All right, Ajay, we leave it here. Thank you for joining in with that analysis.